Yo, 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 what is up, guys? It's the weekend, my dudes. Today, the 6th, I am just doing my research, hitting my notes, studying up on what's coming up, what's gonna be happening this upcoming, or for the rest of this month. We got a very interesting start to the month. If we zoom out here on the S&P 500 SPY ETF, let's go to SPX actually. Go to our daily chart. We can see that we really, it was a weird week this past week. I'm not gonna lie, it was a odd week. We opened at 41.12 on SPX and closed at 41.45. So basically, we chopped around. And interesting enough, where did we chop around? We chopped around where we did last eve up until the CPI report. So that's the big thing. This last week, not a whole lot going on. We had some earnings here and there, and no big earnings. All the big tech companies, they got all their earnings done the week before last. But this this upcoming week's gonna be huge. We have CPI data coming out on Wednesday. Why is that huge? Well, what have I been talking about? Every month I talk about this. This one's huge because we could finally see inflation peaking. And why is that huge? Well, I've been saying, why is it so big? Because then that means the Fed, they can slow down on the rate hikes, and that's always good for the economy. So that is what we're watching out for. The consensus on that, on this upcoming CPI report for the month of July is going to be 8.7%. So that is a decrease from the 9.1% that we had for the month of June. And why is this going to come down? Well, oil has come down a lot. The average price of gasoline in the country has come down quite a bit, which is a monstrous, huge driver of inflation. Do do do. Let's see. Yeah, it came down about 10%. If you look at it, it was at an average over June. The national average of average gas price per gallon for regular fuel was at about $5.03. It came down to $4.67 this last month over July. So a nice decrease. The price of oil has come down massively from its peak, but of course that's how it works in the oil industry. They'll jack up the prices of gas $1 overnight. They don't give a shit. They'll drive that shit up straight up if the price of gas goes up, which they did after the war in Ukraine started. But then when prices come down, they slowly drop the prices down. It doesn't drop nearly as quick. They'll raise them up immediately, but they come down. It takes some time. So we know that gas has come down. That's a massive driver in inflation. That increases the price of everything, as I've explained millions of times. We know that the price of other goods that are coming down. We have stores like Target and Walmart, all these retail stores that are talking about, we got too many clothes, they're marking everything down. So we know those kind of things are coming down, which is huge. So these are good positive signs for inflation. That's why I'm convinced we'll see inflation maybe at 8.5%, maybe like 8.2. If we saw like a 7.9% inflation, good night. Good night, SPY. Bye bye. SPY's going straight to 420. And we just have to watch and see. So the main break of support I'm watching on SPY or SPX, I guess I'll go SPY. The main support I'm watching is 407. We gotta hold that. If CPI comes out hot and we're still at like 9%, and we break that level, I'm convinced we're seeing another leg lower. And I'm not talking down to 360. I'm talking like 350. Like we're going down because that's gonna be very bad. All this rally has been is the hope that the Fed can finally slow down their rate hikes in the hope that inflation is sorting itself out, that it is a transitory issue. I mean, I know that was the meme the last year, 2021, that hey, it's transitory. But now that we know what is causing the inflation, it can be claimed to be transitory. A lot of it was caused by Ukraine, which is transitory. It was caused by COVID, transitory, which is caused by the price of gas, transitory, because that's also coming down. So this entire rally that we've seen over the month of July has been just based on the hope that inflation has peaked, that the Fed is slowing down. They might even pause. They might even reverse. They might U-turn. Oh my God, stocks are going straight to the moon if they came out and said that. So that is why we might just see 2 days of chop. I'm gonna be very careful on these upcoming days because I had a bad week this week. No sugar coating it, and then I zoom out and I look and see why, and it's like, oh well, I mean, Spy did this. It just chopped around. There wasn't much direction. I got caught in the chop. I'm an idiot. And that's all there is to it. And I'm my own worst enemy when it comes to trading on days like that. I mean, look at this hourly. I mean, fuck me, right? Look at this. SPX straight up 1 hour, straight down 1 hour, straight up the next 2 hours, straight down the hour after that. Just not good price action. I'm not trading that anymore. I know I said that a million times, but I'm telling you, don't try to chop yourself up because I got chopped up hard. So, we need to break out of this range. Gotta break above 4180 on SPX. That's where we peaked back here in June. And I think it is just really crazy how we find ourselves right back at this little area, right back to this zone where the entire market, where the world stood still while the market was waiting for the CPI data to come out for the month of May. So this came out in early June, and then that's where it began the dump. That's what I'm really worried about. If CPI data isn't as great as everyone is anticipating, and this rallied off the hopes that it would, so that's kind of what the market has just been doing. I mean, we got all this blood because we priced in the Fed rate hiking rates, we priced in all the inflation and the potential recession, but now we have priced in on this rally the fact that the Fed is going to ease up, that we know how hard they're going to try to jack up rates. They're trying to get to like 3.5. So now that we've got priced all that shit in, we're just sitting in chop zone, and we're waiting for news to see what else do we price in next, and that's unfortunately the name of the game. We got our jobs numbers out on Friday. No, Thursday. Yeah, Thursday of this last week. Unemployment we're back to where we were pre-COVID, which is like, hooray, yay, it's great. And it's weird. We're in a recession, but unemployment is still like non-existent. It's insane. And we added like 500,000 jobs to the economy, just crazy. The market really didn't do much off of that. It was expected. So it's weird. It's just such a strange climate that we're in. You it's almost impossible to say we're in a recession when unemployment is so high. It's just crazy. Or when unemployment is so low. It's impossible to be like, yep, this is a bad recession. People are losing jobs because it's just not true. I mean, we see Silicon Valley jobs; those are dwindling, but they're still, and even in that industry, there's still 2 openings for every one person looking for a job, and just about with everything else too. It's just insane. So it's a very bizarre. It's just so strange this climate we're in. So, anyways, it just begs the question of we know that what the Fed does every time we go into a recession, they ease up on the rates, they drop rates to near zero, they start pumping money into the economy. This is what they did during COVID. So it's hard for me to conceptualize that the Fed is going to U-turn on their rate hikes at any point because a lot of people are expecting the Fed to just once inflation is like gone to just drop rates back to zero and just leave them there because we got so used to that Fed funds rate for so long. I mean, we had it for basically 10 years after 2008. And then where did it get us? It got us to where we are now. It got us inflation and just everyone just gets used to that free money for so long, and it's overstimulates the market. The market can't be stimulated. I mean, everyone loves when stocks just go straight up, but you have to pay the price eventually because you just can't have free money flying everywhere for so long. So yeah, we had our zero rate our 0% rates from 2009, started 2009, until finally over in 2016, where they started slowly raising them up in 2019, and then inevitably dropped them because they got to 2.5, and that was too much. The market was freaking out just on 2.5%. It got too much, just so crazy. And then of course COVID dropped them back to zero. So now we are sitting right at 1.68%. So assuming assuming things aren't so bad, this CPI report, we get the FOMC. We don't. So that's another thing. We don't get FOMC this month at all. We don't. The Fed is going to be chit chatting. They always have their little things where the Fed governors go out and talk, and you got to pay attention to those because if one of them comes out and says, "Hey, I don't think inflation's dead until we get to 10% or some shit," that's going to be bad. But they don't talk in August. They don't have a meeting. They don't hike rates, so that's why I think August will be very bullish if we get very good CPI data. And then we'll hear from them in September. If they come out in September and say, "Hey, we're only doing 50 basis point rate hike," that's going to be great, I think. But that is if the current economic situation still is in this uptrend up through September. Typically September is when recessions get really, really bad. So, or September and October. So, I don't really see that happening. I think things are a lot better than people thought they would. Even personally, me, I thought by now we'd see unemployment at least coming up a little bit. It hasn't come up at all. It hasn't budged. People are not losing their jobs because of inflation. Companies are not strapped for cash because of inflation. I mean, some are, but just in general, for middle class folks, it has not been affecting their jobs. So, that's just the very strange world we're in right now, and I always get skeptical. I mean, I've only been trading in this market, in this bear market. I started back here in January, so I've only experienced this. I forgot what it's like to be in the peace times and be in a bull market. It's weird. We're not in a bull market yet. I'm not saying that. I'm just saying it's going to be hard for me to flip that switch in my brain back to being a bull because I never got to full-time trade when the bullishness was with us. I only got the blood. Like, I started right over here, literally at the start of this week at like the 12th or 13th of January, where SPY fell from 4,700 down to 4,200, a 10% drop over like 2 weeks. So, anyways, that's where I am on the FOMC situation, the CPI situation. I think I'm not gonna try to guesstimate, but I do have a SPY call, a 420 call that is a month out, the 6th of September. That's my hedge to the upside. So if we do just get a screaming rally off CPI, hey, I'm gonna make some money. If not, I'll short the hell out of everything, and there goes my call. So be it. I know I did this with the fucking puts, but I'm not going nearly as big on the puts. I did like way too much on those puts, and I lost a lot of money. But um, the other question is, has the economy felt the effects of the rate hikes yet? We don't know yet. That's another thing. So the Fed, they're in a really rough spot now. We thought they were in a bad spot at the start of the year. They're really in a spot now where they don't want to tighten too hard because a lot of this inflation just isn't their fault. It's not demand. I mean, demand is very high for stuff, so they're helping that come down through rate hikes, but it's just a supply chain issue. So if you tighten, if you're trying to fix a circle, if you're trying to put a square into a circle, a round-shaped hole, you're not gonna fix the problem. And that's kind of what the Fed is doing. They're like a child, and they got the square, and they're trying to put it in the round hole, and they're just like, Ugh. It's not the solution to the problem because it's so much supply chain issues. So that's not up to the Fed. That's not up to anyone. I mean, that just is caused by various things going on in the world. Um, anyways, around anything else coming out? I don't know. I think it's just really going to be an easygoing month. I mean, we have been seeing volume coming down a lot on SPY. We're just getting like these super low volume. I mean, this last Thursday was such low, 45 million shares on SPY. Like, for reference on how low volume of a day that is, uh, I mean, Christmas Eve, or day before Christmas Eve's Eve, the day before Christmas Eve had 58 million shares traded on SPY. I mean, the day after, or the first day back from Christmas break was 56 million shares. The day after that was 47 million. Day after that was 54, and then New Year's Eve was 65. I mean, it was like, what is this volume? Very bizarre stuff. So it's pretty clear that we're just going to consolidate in this zone, and I have my ranges. I have my risk level. My risk level is 407. If we break below that, a decisive break below that, it's all over. We're going to be seeing some downside. If we break above this 417 level, we're good. We're getting more upside. We're going to test this resistance line up here around like 430, I would imagine. So that is didn't mean to do that. That is the other key level that we have over here that we rejected off of twice, and we double topped twice off of over here. 430 basically. Um, Psych level 2. So that's the roadmap. Um, it could be a really interesting sort of month. It's just gonna be slower. We just don't have FOMC coming out. We've gotten past earnings, so it could just be super smooth sailing. If CPI comes out and it's cooling off, I think we're gonna be seeing some more rallying. I'm just interested for September to see what Powell says at the FOMC there. But yeah, I mean, it's just we got past earnings. Earnings was good for the most part. A lot of companies had really good earnings. Amazon had great earnings. Apple had great earnings. Microsoft fantastic earnings. Google great earnings. Meta sucks, but I think a lot of people were pricing in terrible earnings, and then we got good news and good earnings, and we just bounced hard. So it's like, are we even in a recession? I wouldn't even think so. I just don't know. We had negative GDP growth, but we have really low unemployment. Wages are still going up, even though it's behind inflation. Inflation is probably coming down. We have a Fed that has been very, very aggressive, but it's so weird. I don't know. It's just so weird, and that's kind of the consensus when I research. I get people's opinions. I've been watching a lot of YouTube videos of other people, and they're just like, yeah, this is just like, we don't really know where we go from here. I mean, it could just be free and clear, and we did get our soft landing, which was not soft, but I mean, it wasn't like a full blown recession, but I don't know. It's very bizarre. Yeah, I'm hopeful. Shit, man. If that was it, if we just got 6 months of blood and now we're back into the bull market, I could not be happier. Oh my god, that'd be awesome. But I need to see SPY at least. I mean, this is everything. We gotta break 4,300. We break this downtrend. We have this very clear downtrend line. We break above that. We get a higher low, and we're free and clear. We're good. Everything's good. But otherwise, gotta wait and see. I'm gonna let the chart tell me where the market's headed. I haven't been doing that recently. I've been trying to let the macro situation tell me where the market's heading. When all you need to do is look at the chart. I mean, come on, just look at the chart. If I would have just ignored everything else and looked at the chart, I'd be like, yeah, we're going up. What the fuck? Look at the chart, dude. So I need to do that more. And I would urge others to do the same because I know there's a lot of bears that are just getting blasted. I mean, they're just like, what the fuck? Inflation's still 9%. The cost of everything going up. The oil is still high, but the market is just so forward thinking. It prices in 6 months from now. It's not thinking about the next week or next month. It's pricing in far down the line. So that's what you gotta keep in mind. So. Anyways, yeah, that's all I got for you folks. I'll catch you later. Peace.